Okay, so just watching the ADBE position, just wanted to spell out the trade for non-option traders, for people maybe that are just new or just looking at options, or share traders coming across. In the description of the entry video, I listed some stats on the position, and I just wanted to sort of go over those a little bit. Now, I sold the 110, 115 call spread for 70 cents, so I received $70 per contract. Now, that required a $500 margin, so per contract, so the minimum amount, the minimum cost per trade is $430 or $500 per contract. On entry, you then receive $70, so net balance would be $430 per contract. Now, let's put that into more perspective, more money terms. A $500 position, you would have just made $70 on that 500. So a $1,000 margin position, you would have made 140, and so on. So the minimum trade, I mean, it could have been done differently. You could have done wider strikes, you could have done some narrower strikes and changed your credit, could have got more credit, less credit. But the one that I chose was a $5 spread, and so that meant a $500 margin per contract, and like I've said, received $70 per contract in credit upon entry. Just looking now, the stock price is $136.60. It's pretty much where it was at the opening bell. Current spread price is worthless. It is 1 cent, flicking between 1 cent and half a cent. So I could buy that back now at 1 cent, leaving $1 on the table, so taking in $69 profit and closing the trade. Yeah, not really much else I wanted to touch on. Just basically that per contract minimum of the strikes that I chose meant a $500 position per contract. 10 contracts is $5,000, and you would have been up $700 in minutes. Yeah, anyway, so I hope that helps. I hope that sort of clarifies the requirements, cash requirements, margin requirements for the position. It is very simple. It's a very simple trade, vertical, and yeah, pans out once again. Thanks for watching.
Okay, so here we go. This is the ADBE opening bell. Back on the daily chart here. Got some prices coming through. It is up, so 107.50. It's somewhere around the trend line, just poking through. You can see my vertical that I sold at 110, 115. I sold that for 70 cents. This was the puts that I had earmarked as well for 65. Here is the opening bell. 14 cents, 13 cents. puts were 10 cents even just then at opening. That would have been an easy 10-cent pickup on the opening bell. 9, 10, 12, moving around a little bit. See, the volatility is back to normal. It's showing 60% on my options. Yesterday I saw a 200,000 order. Wow, did I just see a 600,000? $600,000 at 107. Wow. Yesterday's 200,000 order was something like a 20-something million dollar position. I think 28 or something. Anyway, so the puts are now worth 1 cent. That would have been a quick little, that would have been a nice little 10-cent pickup, that, on the opening bell. The 195s. Boom. Anyway, okay, this month's, the December IV was 60, it's now down to 57. It should be a bit less, although the short IV rank is 28%. There we go, a bit more coming out now, 6 cents. What's IWM doing? IWM is rallying, of course. Okay, so here's a good little example of why these are better than share trading. Okay, so it has gone up from my original entry. It's more than $1 higher than my entry, yet I'm nearly max profit. 70 cents, it's now worth 5 cents. So I've taken this, if I closed out the trade now, it's a 65-cent profit per contract. And yesterday I was saying how I didn't think it would move much. Well, it was a $5.50, $5.75 expected move. And what's it moved? $1.50. So I will just run this video for the first 10 minutes. Yeah, I don't think there's going to be much point continuing it. There's not really much to see. I mean, bread's worth 4 cents. I did just see that flash at 2 cents. even, like I was saying yesterday, not even really caring too much about the direction. You know, it can go up, it can go down. As long as it doesn't go up too much, then I reach maximum profit. And as you can see, it has gone up. I got filled at about $1.25, 105.25. So you can see 105, somewhere around the 125, 105.25. It's now up $1.50. So you could say the wrong direction, and yet it's, you know, 90 something % profit of my expected profit. Lots of 500 orders coming through. Somebody is just cleaning out. OB's down to 54%. Now the expected move is $1.58. So I'd say that trend line would hold. Also got the tops, through the tops, for resistance. So anyway, pretty non-event, just how I like it. And it's coming down, it's almost back to my entry point. 6 cents. So that has been IWM, not IWM, Adobe 1 day earnings trade. Yesterday I mentioned something about a 27% profit. That wasn't true. That was actually taken into consideration the puts and the calls trade. This call trade is actually a 14% return on investment. So a 14% gain in however many minutes. I mean, as you can see, the time at the bottom, it is 9:38. So these are 1 minute candles. So maximum profit in minutes. That is why we option trade, not share trade. Is far more superior to sell options.